The difference between a successful person and others is not a lack of strength, not a lack of knowledge, but rather a lack in will. Vince Lombardi. My friends, where there is a will, there is a way. If you want to master these charts because you would like perhaps early retirement, perhaps you'd like to have money in your life, whatever the reason may be, security for yourself, take care of your children, whatever it may be, if you will spend the time, if you will practice 10 to 15 minutes a day, that is all we ask. If you will do it for as long as it takes. I tell everybody, don't worry about how long it takes. Once you master the charts, you will make up for all the time you ever spent. Now, let's jump into these matters. What do we see? Up day for stocks, bonds and gold down, Bitcoin up some. Now, I have introduced you guys to new charts we published yesterday, and you can find it at the website and also at the YouTube channel, the training on the wave technique I'm giving you today in the show notes. If you're not a subscriber, well, you need to be one. You're making a big mistake by not being one. I'm including Maximize Success with the ATR, and also for subscribers, you guys who wanted the STC indicator that you see on the chart, it's a better MACD. You'll see the name of the specific indicator at TradingView. That'll be in your show notes today. Also the ATR stop loss finder, the one that we use on the chart. So the STC, the specific one we use, it goes from red to green, green to red. Again, it is a stochastics and MACD hybrid. Very interesting. The Schaef trend indicator. You will get a lot from that. I think it's the Schaef trend cycle, I believe is what it's actually called. But just look at your show notes. If you're not a subscriber, become one. It's free. Just go to chartingwealth.com, sign up. Every day you'll get the special trainings we put out. You'll get the shows we do, everything you need to get yourself started and moving in the right direction. Now, let's jump into these charts. I'm going to switch over. This is the chart that, of course, we use to trade off of. We put our numbers and everything in there, but I'm going to switch over just because as I was looking at one of my charts today, my STC2 chart, I wanted to share this with you. Why? Well, it's a little easier for us to see. We don't have to look up and down. All I've done is I've moved the STC from the bottom screen just to overlay it on price movement. I was thinking about this today as I was preparing to bring the broadcast to you, and I thought, you know, I'll be able to show them so much more of what's going on at once by doing it this way. Now, this isn't the chart I trade off of. This is one I started with, but I wanted this because I wanted to be able to show you a much bigger picture at one time. This is the weekly chart. I'm going to move this up. I'm just sort of compressing price so you can see more of what has happened over time. In fact, we're going back, a year right here. And I want you to pay close attention to how accurate the trend cycle has been for us. And again, it is quite amazing how good it's been. You can see this 200 EMA, that's the 200 exponential moving average. Price is well above that. This is the weekly chart for the S&P 500. You can see that we've been going down a couple of weeks most recently. In fact, we switched over heading down back when the market most recently topped back in early January, then down for several weeks, up for 4 weeks, and then for the last 2 weeks, it's been cycling down. We have been, though, in a red down move on the STC that whole time. Now, that is the weekly chart. Price is still above. You can see this 200 EMA, so that's important to pay attention to and to understand. Now I'm going to, again, cycle down from where we are on the weekly to where we are on the 2-day. You can see the 2-day had cycled up with that recent up movement over those few weeks that we saw on the weekly, and you can see where it's cycling down also. And just this week has gone to red. That's important for you to note, for you to pay attention to. You can see it up here. So what does that do for us? Well, that's telling us that indeed, we are seeing the intermediate chart now head down with that weekly chart. Now let's go to the smallest chart. What do we see there? Well, we see where it kicked up in the afternoon. And actually, I'll stretch this out since I had compressed it to show you the big price movement on the big charts. You can see what's going on here is that we have price moving right up and touching the 200 EMA. Now I have a negative 14 here. What does that mean? Well, and I have a little asterisk here. That asterisk is denoting to me the fact that we have a bit of confusion going on with that negative 14. What we have happening is the weekly and the 2-day are actually above their 200 period moving averages. The half day is below. It is, but both of them are actually negative, both the weekly and the 2-day, although they're above their 200 EMAs. We see that the half day is actually touching the 200 EMA with this turnover. So if you were thinking, oh, I'm going to jump in and ride this up move, you need to realize that you do have going for you the fact that even though the weekly and the 2-day are in downtrends, they are above their 200 EMAs. Now, we're just touching the 200 EMA here, which again, our rule is if you're touching that, you can actually execute that move to try to ride it up, realizing the headwinds that you are engaged in. And that is the reason we denote the negative 14. 4 negative points for the fact that the 200 just rolled over, and 10 negative points for the weekly because it is in a confirmed down move. Asterisk is there because both the 2-day and the weekly are actually above their 200 EMAs. There we go. Well, I'll have to squinch it up for you to see it. You can see right down at the bottom on the weekly. So keep that in mind. That is a possibility. I did not pull the trigger on it. You may desire to do so. And again, if you do, practice trade that, pay close attention. The nice thing is it's starting at the bottom. It may be a decent move, but it could be fraught with peril. So pay attention. Up for the day, 1.61%. Now let's go back to the weekly and we'll move on to the Nasdaq 100. What's going on there? Well, I've got that recorded as a negative 15. We can see that price is above on the weekly. Also have an asterisk there, but it is heading down. What's going on the 2-day? Price is sitting right there on the 200 EMA. You can see where it touched it during the day and it crossed over going down. Now, what do we call that? Well, we call that, of course, a 2-day recross. We could call it that also on the S&P because the 2-day is heading down with the weekly. Isn't that correct? Absolutely it is, and it happens to be touching the 200 EMA, which could get you into a down move there. What about the half day? Well, we see the half day is actually still negative. It did head up for the day, up 2.24%. So of course, maybe you had some trepidation about entering a trade there. You have conflicting information. Nothing is making it easy for you. So we do have, of course, the half day has been going down all the way since when? Since it crossed over going down in the afternoon on April the 5th and actually pushed through that 200 EMA. So again, very difficult to make a determination as to what you want to do there with this recent pump up after many days of down movement. 1 day of up movement, of course, doesn't change a whole lot, particularly if you're dealing with a minus 14, minus 15 here, and a minus 14, if I recall correctly, yes, on the S&P 500. So keep those things in mind. I didn't pull the trigger on any of those. I wouldn't be pulling the trigger on any of those. Now, let's look at 20-year bonds. Where are they? We'll start with the weekly chart. Check out this weekly chart. Look how, well, first off, if you're shorting bonds like we've been talking about, been a great time to be doing that, hasn't it? Since you had the crossover back in early January. It has been going down, but for one brief period where things moved up, you see one green Heikin-Ashi spinning top there, everything else moving down, 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 down. Shorting bonds during this time would have been a rather successful activity, and things still pushing down strong. Let's go to the 2-day. What do we see there? Well, you can see where the 2-day rotated around a couple of times, giving you some opportunities to grab some profits and then to jump back in with recrosses. That latest 2-day recross occurred back when? That was on March the 8th. Again, a good time again to jump in and head down with a recross. Now, we still, though, see lots of down movement. What about where things are as far as our STC goes for the last crossover point there? That was back in the morning on the 5th of April. And, of course, things still moving down in bonds. Bonds down for the day, 0.75%. So opportunities across the board for shorting bonds for quite a long period of time. That's where we are on bonds still. Lots of downward pressure. Going to go back to the weekly and we'll take a look at gold. Where are we on gold? Well, we had that recent crossover. On the weekly chart, we had a crossover back in October going up on gold. And we had gold pull back a little bit. Really, the only pullback was there in late January. And then things took off again in gold. And when I say pullback, I'm just talking about the weekly STC. And of course, we have seen gold just take off and move up quite strongly. Now, when we look at gold on these last 2 weeks, gold was down for the day, but it again is trending upwards as far as the candlestick movement goes. We go to the 2-day, and of course you can see where gold had peaked most recently back on March the 8th, had moved down, and then over the last few days rotating back up, pulling back as we go to the half-day chart. You can see where it rotated over in the morning on April the 19th, of course, today, and then down further in the afternoon, down 1.51%. The biggest pullback that we have seen in many, many days, but again, crossing over, giving us what opportunity? Well, an opportunity potentially for it to cross back over and allow us to jump in. We'll just have to see how much gold pulls back. We're at a 14 right now. Of course, the weekly heading up, the 2-day heading up. The only thing that's not heading up is this recent pullback from today in gold. And we'll be waiting to see how far that pullback goes. Will it come down and tag the 200 EMA? Will it settle out and then move back up? We don't know. We'll wait, we'll watch, we'll see. We'll let the charts lead us. Now, back to the weekly. And lastly, we will see what's up with Bitcoin. Now, we look at where Bitcoin is. I'm looking at the Van Eck. I'm not using the New York Stock Exchange Bitcoin Index. It's only reporting once a day. So what I've done here is I've provided you with the Van Eck. I've also gone through looking at the Bitcoin US dollar index. This is the 24-hour-a-day reporting. I've made sure, as I've done our calculations, that the weekly is above the 200 EMA, the 2 days just below the 200 EMA, and we look at where the half day is, it's pushing right up on it. So I've taken that into account as we look at what's up with the futures. This is what I've been trading as far as Bitcoin goes. And of course, as we look at things, we can just now see registering on the half-day chart. You can just now, for the first time, see the 200 EMA registering there. Remember, just started running when? In November of last year. We look at what's up here with the 200, the weekly. We see that, of course, it has been down strong over the last couple of weeks, was up for the day. We look at the 2-day, we can see again that it has been trending down for many days now. And we look at the half day, and even with the most recent up movement, still trending down. So overall, we have negative 15. That asterisk out to the side tells us that one or more of our charts are above the 200 EMA for them, and I just went through that for you. So that's just a little asterisk there to give us a little heads up as to where we are. So we will be watching Bitcoin to see again how this ends up settling out. Not in a position to be jumping into any up move in Bitcoin at this point in time. Again, just waiting for this most recent down moves to settle out and to give us some opportunity for jumping back in. I've had some decent trades in Bitcoin over the last few weeks, but not anything right now. I hope that you'll take the special training that we put out for you today. It is a good one. It's Maximizing Success with the ATR. It's one of the newer trainings we put out. I hope that you enjoy it. For our Patreon members, we will be recording for you tomorrow, of course, our weekly Charting Crypto, where we'll look at where things are in the crypto market, keeping in mind, of course, the big kahuna, the big player is Bitcoin. And when Bitcoin is struggling, typically overall, the entire crypto space is struggling too. Bitcoin is that big a dog in the fight. That's where we are, folks. Thanks so much for being with us. We love to hear from you. Do check your show notes if you would like the link that I've put there for the chart that I am using now, along with those two indicators. You can find them at TradingView. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.